Let's begin with what you got right. Why is there a slowdown in the U.S. and how linked is it to the international markets?
It began, Tom, I would say that the slowdown occurred because there is no reason why the economy should permanently speed up. The tax cut of December 2017 was a temporary sugar high. We had it for a couple of quarters and then it ended. Now we have a higher deficit and we have come back to lower growth. So that's not going to help. Globally, the situation has clearly worsened, and I think for the next 18 months, trade. That is going to be the story for growth.
The hallmark of your work is you are always trying to get out front of the zeitgeist. The zeitgeist is wait for the data. Why this time around does Chairman Powell not wait to see GDP slow down, not wait to see the inflation dynamic come in? Why does he have to act now?
The reason I think, Tom, and that's an excellent question, the reason I think is because the Fed has rarely been data dependent as they have always claimed to be. It is more a case of data trying to fit what the Fed wanted to do. In December, they decided to hike interest rates, to give a hawkish message, and they said the economy was very strong. 2 weeks later, everything changed. So that is the major reason why I think Powell is unable to wait for the data, because he has to correct for what he did in December, and it's going to be not going to be easy doing that.
But Sri, what if the cut, if it comes today, is actually a mistake?
The cut would be, it cannot be a mistake, or rather, it can't be a very new mistake, Francine, because they have been building up the speculative fervor for the last 10 to 12 years. And if they were to cut, it would just be one more instance of doing it. The real problem is, what are you going to resolve it? If you cut it, you increase speculative fervor. If the cut is not enough to satisfy the market, the Fed will keep cutting again and again. The Fed is at the mercy of the markets.